Well, April was one of the strongest months we've had for years, actually, in global funds. But it was a little bit quieter closer to home. So here's what drove it. It was really a month of two halves. Early in April, geopolitical tensions in the Middle East probably reached their peak. But then the situation eased with the ceasefire, oil prices came back a little, and markets bounced back quite strongly. The S&P 500 hit a new record high. But it's worth saying that this has not been a broad rally. Semiconductors and the big US technology names, they've been the companies that have done most of the heavy lifting. In fact, anything linked to AI infrastructure has really been the place to be. So our global funds were up around 10% for the month of April, driven by AI hardware, semiconductors, and a selected group of large cap technology companies. Our Australasian funds are positive too, but a bit more modestly. New Zealand and Australia are still dealing with high fuel costs and stickier inflation, which is keeping interest rates higher, and it's really weighing on both of our economies. One piece of news worth sharing this month is that our KiwiSaver Growth and Balance funds are now both ranked number one in the Morningstar categories over the last 12 months. Being on the right side of the AI hardware boom and largely avoiding parts of the market that have been disrupted by AI in the software area has made quite a difference to our portfolios over the last year. So from here, what are we doing? We're taking small profits in parts of the market that's a little bit stretched, and we're adding to names, quality names that locally we think will benefit if the rates come down, and also if there's a rotation back to value in the US market. We're trying not to predict every headline geopolitically because that's not possible, but we're trying to build our portfolios instead that can perform through whatever headline comes our way. So that's a wrap for the month. Thanks again for your trust.